Hello, trading has closed on August 1st, 2024. As always, we'll start with our disclaimer, go over our calls, and make our predictions. This is my trading plan for Friday, August the 2nd, 2024. Please remember my calls can be wrong. Trade at your own risk. Also, for the next 3 weeks or so, I have personal business. I'm just not going to be able to watch the market all day and may not be risking my own money on any of my calls. Every now and then it's important to remind people that the system I use gives targets, it doesn't give entries. And also, ever since last month's high, I've been ignoring buy signals and looking for places to enter shorts and leave shorts. Okay, that being said, let's go over our calls. Had the pattern with the early high, we certainly had that. That was here. Here's your early high. Tomorrow should have the early low. We had a wave count in spite of this huge rally we had yesterday. And yesterday was hard as it is to believe after today's reversal. I mean, we were up 100 handles here. That doesn't happen every day. We had a wave count compatible with this being the high. And I said as long as we didn't gap and promptly overtake that high, that you could argue that this rally was over. Well, we did that. We gapped and overtook the high. It isn't a signal to buy, but it kind of kills the idea to go short, which is kind of a shame because, as we'll see, I think that was the right count, and this is an expanded flat. Now we did have a target from earlier in the week, 54.11.56, and that printed, so we'll cross it off the list. Not only did the target print, there was support under the target, and if that's not a pretty picture, I don't know what is. Now this looks pretty ugly, but it's important to remember a couple of things. One is, ever since we called this as a possible low, we've been making higher highs and higher lows. And as long as we're making higher highs and higher lows, we're not going to get too excited about the downside continuing. Now, futures are way down as I'm recording this, so we could gap down under here and kill that whole idea. But that hasn't happened yet. So far, this hasn't changed the picture that this might hold. Also, this was let's see, today's Thursday, Wednesday. This was Tuesday's trade. We had this big drop, and we said we could gap up Wednesday because we had this big drop and recovered all these lows. It's important to see here, we had a bigger drop, couldn't take out this low, but not only recovered all of today's lows, but even these highs from that day. So, for now at least, pending tomorrow's action, we're just churning at the lows and we can't break through support here. Let's go over what that support is. Well, here's a weekly chart. And if you measure from this low to this high, that's a Fibonacci retrace, and we've stopped right at the Fibonacci retrace. I think we're going to go lower at some point, but we haven't yet. That's one of the places where support's present. This is Tom DeMark's TDST line. Support goes to 1 bar under the line. So once again, we're at a support level. Now, I think that support's going to break at some point. But until it breaks, you've had a straight line drop to support. And when you have a straight line drop to support, typically either you gap under support or you're not going to break it and have it stay broken. It won't stick. During the day, we got a sell signal in the afternoon, and that's already played out. Notice this close means for the last few hours of the day, we couldn't accomplish anything. We're just not holding on to these attempts to break lower. Now, of course, at some point, I think it will, but let's take a look at the wave count. I should say we've mentioned this line a number of times. That's still holding. I haven't given up on recovering to the 5600s, although after today I must admit I'm not too enthusiastic, but I haven't given up. Now this was the count we had yesterday, and we said this was either green B or A of B with 5 waves up. Now it's possible to count this as an ABC for blue A. And if you'll notice, C, black C of A, has a good fibrillation to black A of blue A. So that's an ABC. This could be B, and then we have a clear 5 waves down, waves 1 and 5 being equal. And if that's A and B, blue C, here is a 61.8% of A. And what's interesting is if this is green B here, if this is green A, the height of green A, green C is a perfect 50%. So just because this count works doesn't mean other counts won't. But if there's no count that has this as a possible low, it's not going to be a low. If there is a count that makes this a low, it doesn't have to be the only count, but if we do rally from here, if support does hold, we've completed green ABC down, and we could have a pretty good rally. Just because it can happen doesn't mean it will, but you've got a count suggesting this support's going to hold and we're going to have one more wave up. It can all be killed tomorrow. You take this out, it's the wrong count. I mean, it's that simple. But if we do rally from here, if we can't take this out, even if we have an inside day tomorrow, if there's no follow through to this drop, that last count suggests we could still get the rally I want before we get the drop I think is coming. That we're not going to know till the open. Now Friday's pattern has a early low regardless of where we open. The non-farm payroll report comes out before the open. I can't predict the response to major economic reports with a sufficient degree of accuracy. Now the market dropped the support in a straight line, and usually that means we either gap under support or support wins, meaning late breaks under it won't stick. The futures have been down nearly 30 handles from the close in overnight trading, so it's certainly possible we gap under support. I mean, I can't say it's impossible. The overall picture is bearish, and I expect support to break at some time. However, despite the day-long drop, we couldn't maintain a break under intraday lows, nor the lows of prior day, which is a bullish pattern if, in capital letters, if that's maintained at the open. There's a wave count compatible with the completed ABC down at the low, and if, capitalized, if we gap up smartly, remember, non-farm payrolls can change everything. If we gap up smartly, the elements are there for a strong rally, as overnight shorts are going to be trapped. But if we gap down smartly and hold it, I mean, if you gap down smartly and recover, it's not a gap. But if you gap down smartly and hold it, then support fails. Now, I think it's going to be support to fail here, for support to fail here because of the TDST line. But I think we're going to go probably at least to 5,200 or below at cash. So support certainly could fail. But this is one of the places from which we could have a good rally. Now, as I say, I'm ignoring buy signals because I think all the surprises are going to be to the downside. But certainly, this is not the time where I personally would initiate a new short position, I'd be a bit reluctant to hold on to any short positions, and if I miss a drop, then I miss it. It depends if you want to maximize your winners or minimize your losers. If you want to maximize winners, you just hold on until the lower prices print, and I think you'll win. But if you want to minimize losers, this is one of the places from which a good rally is at least plausible, if we can hold on to this low. If we can hold on to this low, and particularly if we gap up tomorrow, I think we could have a pretty good move to the upside. And until the non-farm payroll report comes out and we see the open, that's something we don't know, but at least it's possible. And that's today's call.